My portfolio is now sitting at £16,900. We're closing in on £17,000. I had some really good performance from some of my stocks. I also received dividends from 6 companies, and I'm going to show you all of those dividends today in this video. I'm also going to show you what I've been buying into this super overbought market, and I'm going to show you why I'm buying into the market at these huge prices. The S&P 500 was up 4% in June, and the FTSE 100 was actually flat in June. So we're going to see how my portfolio has been performing in June to compare to the markets. Let's get into the video. So this is my portfolio on Freetrade. I have £12,200. I also have around £4,000 in Trading 212, which I'll show you after this. So this month, my portfolio is up £151. If we look over the last week, it's actually down £100. So I was doing really well up until about midway through June, and then the stock market has sort of taken a bit of a hit in the last week or so. And if we look over the last 6 months, which is roughly year to date, you can see that I'm nearly up £1,200. So my portfolio has done really well over the last 6 months, and even here over the last 12 months, up £1,700. You can see here my biggest position is in Realty Income, and Realty Income is a real estate investment trust, so they invest in commercial real estate. Not to confuse this with residential real estate or even office-based real estate. So most of their properties or most of their debt is actually in commercial real estate, which isn't office blocks. It's actually buildings that supermarkets or big department stores rent off of Realty Income, and they're very reliable payers. So if we have a look at the position, the current value is £1,850. I'm currently down around 10%, which is about £200. You can see here over the last month, it's up around 1.5%. And you can see like it's been dipping to around $52 a couple times this month, where people have been selling off, and then it hits $52 and people are buying more into the stock. You can see over the last year, it's actually down around 12%. Not doing great. But what we should see towards the end of this year and the beginning of next year, that interest rates will start to come down. We should see 1, 2, 3 rate cuts by midway through 2025. And stocks like Realty Income should get a bit of relief from this, and they should be able to sort of perform well when interest rates start to come down. My next biggest position is Microsoft. Now, Microsoft I bought at a very good time in the market. I bought it around October 2022, and that was around the bottom of the market in that cycle. So you can see here, my position is around £1,400. I'm up about 70%. That's about £590 of gains. And you can see over the last month, it's up around 6%. And even year to date, which is around the last 6 months, it's up around 20%. So my next position is VWRL. Now, this is the next position that I'm going to talk about in depth. I believe quite heavily in investing in ETFs, and VWRL is the Vanguard All World ETF. So you're investing in stocks from around the world. It's a really good way of diversifying the portfolio and minimizing the risk in the portfolio. And also, as you can see here, over the last month, it's gained 3%. So it's doing really well at the moment. And even year to date, I'm actually up about 11%. You can see that just investing in an all-world ETF, you're still going to make gains. In Freetrade, I've invested about £1,350. I have 13 shares, and I'm up around 13 to 14%. I do have another 8 shares in Trading 212, which I'll show you after this. So that brings my full position up to around £2,000. So my next 4 positions that are all above £1,000 are Unilever, GSK, Google, and Pepsi. Unilever has actually been doing reasonably well. It's gained about 2.78% this month, and it's done really well this year, up 13.6%. And my position is up around 13%. The next one is GSK, and this is sitting at around £1,150. Now, GSK had quite a bad performance this month, down 12%. Now, this is mainly due to a drug named Zantac that they had some issues with. It was a legal case that was allowed to proceed in the US, but it dropped like 10% in one day, and then it continued to drop. And this is really providing a good position to buy into GSK, simply because GSK is going to continue to be a dominant player in the pharmaceutical industry. And I don't think that they're really going to go out of business from this. I just think that their stock is kind of out of favor and people are sort of betting against the company. Realistically, I'm not going to sell out of GSK. In fact, I'm probably going to consider buying more into the company. When you think the price is currently about £15 and I'm sitting around £13.74 per share, I'm still up around 11.5%. I'm still sort of waiting to see if any other news will come out about this lawsuit. But if you're looking to buy into GSK, this is providing a very good opportunity for you to do so because it's at a very good price right now. The next company is Google. My Google position is up around 75%, which is doing really, really well. This is the same for Microsoft, where I bought it around October 2022. So I got it at a really good price. Now, the position is currently sitting at £1,130, up around £480. And just this month is up 4.5%. These stocks are still getting the gains from this AI revolution that's happening, and I expect this to continue going into 2024 and early 2025. And then my next position over £1,000 is Pepsi. Pepsi hasn't done great recently. Pepsi was down 3.7% just this month. Year to date, they're down 4.6%. And just in the last year, they're down 11%. This is providing a good opportunity to buy into Pepsi. I don't think they're going to lose much of their market share. I think there was a lot of news around Pepsi losing out to Dr. Pepper to be like the second most popular drink in the US. But I think that's all sort of silly, really. Pepsi is still a very strong brand. They have lots and lots of brands underneath the name PepsiCo. And I think they'll continue to have reasonable inflationary growth across the globe. And they'll continue to make acquisitions of these other strong brands. My position is sitting at around £1,000 and it's down around 5.5%. Just in the Freetrade account, I do have some other positions. I have SSE, Lloyds, Amazon, and Tesco. You can see here that they're all doing reasonably well. SSE is just still positive at up 3%. They had a good month, up nearly 5%. And then Lloyds is up 20%. My Amazon position is up 70%. This is the same as Microsoft and Google, where I bought it in October 2022. And then my Tesco position is up still about 20%. So let's move over to my Trading 212 account. This is my Trading 212 account. You can see here that my portfolio is sitting at £2,873. And you can see at the top here that my whole portfolio is at £4,709. Now that difference is just the cash sitting in the account. So I have around £1,900 sitting in cash. This is mainly because I just put some money into the account. So I added another £600 this month. I'm sort of being more surgical with my additions to my positions simply because we are at an all-time high in the market. And I just want to make sure that I'm buying the companies that are correct to buy at this point. So the 5 positions I hold in Trading 212, the iShares MSCI India ETF, Nvidia, Rolls-Royce, VWRL, which is the Vanguard FTSE All-World ETF, and then Visa. Barring Visa, all of my positions are actually in the green still, which is good. I only recently bought into these positions around a month ago. This is when I started adding into Trading 212. So if we just have a look at the monthly performance of each of these positions, the India ETF was up 6.25% in June. That's doing really, really well since I bought into the ETF. Nvidia up 7.7% this month. I do believe that Nvidia will continue going into late 2024 and maybe even early 2025. When we start to see interest rates come down, when the US election starts to really get underway, I think we will see the stock market continue to go up and up and up. I think there's just a lot of fear in the air right now, considering that we're at all-time highs, and there's lots of videos at the moment going around saying, how to invest in all-time highs, how to do this, how to pick your stocks at all-time highs. I think at the end of the day, you just have to keep buying into companies. Like if you're buying into companies now at all-time highs, in 5 years' time, this all-time high is probably going to look, it's probably going to be 20%, 30%, maybe even like 50% below where we are in 5 years' time. There are companies like Nvidia that are trading at like a 70, 80 PE, which is a price to earnings ratio, which is an indicator that they're trading at a ridiculously high price for what they're actually earning. But we will probably see their earnings to continue, at least for the next quarter or 2 quarters, in my opinion anyway. So the next stock is Rolls-Royce. Now I think I've sort of missed out on the massive gains that they had over the last year to 18 months. As you can see, over the last year, they're up 200%. But I bought around a month ago, and they're up around it's up 2% this month. And my position is up 0.68%. The next one is VWRL. Like I said, I'm going to continue buying into VWRL. I want to make it a very big position in the portfolio. I want to make it around 25%. It's currently around 14%. I'll be continuing adding to this position in Trading 212, and eventually all of my portfolio will move over into Trading 212. So my position in VWRL will be the biggest out of all of my positions. This month, up 2.86%. And then my last stock is Visa. I bought Visa at a very high point in the market. There's a lot of debt in the US. lots of use of like the buy now, pay later companies. And I do think Visa will continue to make gains. I just think that there's a lot of nervousness about the market and about these types of companies. But I do think that when interest rates begin to come down, the election gets started, spending will continue. And I think Visa will sort of continue making gains and gains and gains. So this month, they're down 2.27%. Over the last year, they're up 10%. And I do think that we'll see a little bit of a dip. I might buy a bit more of Visa, and then they'll continue to go up and up and up. So let's now move on to some of the buys that I've actually made this month. You find that by going to the little 3 bars at the bottom right. You'll see my email up there, which I'll probably block out. And then if you come down here into history, you can go to orders. You can see here that on the 4th of June, I bought 20 shares of the iShares MSCI India ETF for around £141. Then I bought 1 share of VWRL for £102. And then I bought £100 of Visa, which is 0.47 shares. So like I said, I'm still buying into Visa because I believe that I want to have that as a big position in the portfolio. I believe they're a very good company, strong company. They'll still have lots of gains. They raise their dividend a lot. They pay a very small dividend, but they raise their dividend very well each year. I do believe that they will continue to have stock market performance. VWRL, again, like I said, I'm going to continue buying into that company, 1 to 3 shares every single month based on price. I'm hoping to see dips every now and then, but if not, I just buy it. So we can see I bought it at £102, and currently the price is £104. So I've made £2 already on that share that I just bought. And then iShares MSCI India ETF. The India ETF, I'm probably going to keep it around 3 to 5% of the portfolio, just as a small position, as a bet on India, as I believe they're going to be very good over the next 10 to 20 years. A video is going to come out soon, like I said. So yes, that's my trading 212 position. I've shown you the buys that I made. Not very many this month, around £300, but I did make an addition of £600 in cash to the portfolio. Now that I showed you my portfolio in separate places, let's now see it all in one place on my investing spreadsheet. So you can see here that I have 15 positions. I showed you them all. We won't go through all of them on here, but you can see I've got about £1,800 in cash. I have about £15,000 invested, and that leaves me with a portfolio value of £16,900. My total return is around 15%. My total dividends received is around £400. The dividends I received in the last 30 days is £33, and we're going to go through each of the companies that paid me this month. My yield on cost is around 2.9%. So that's the amount of dividends that I've received divided by the amount that I've invested into these companies. So that gives me my total return of around £2,000, which is really good, I think. So if we have a look at this purple graph here, you can see that those 3 big bars are the 3 tech companies that I bought in October 2022. You can see they're Google, Amazon, and Microsoft. They're doing really, really well. And then you can see there's 3 companies which are actually in the negative, which is Pepsi, Realty Income, and Visa. This is a really nice visual to show me how well my companies are doing. I did have this thought earlier where I would take out the tech companies that are doing really well, put them in a separate graph, so then I have a better visual of how these other companies are doing, because we can't see anything for the Indian ETF or Rolls-Royce, even though they're up around 1%. So you can see in this blue pie chart up here that my US position is around 50% of the portfolio, and ETFs, which is VWRL and the India ETF, make up around 17% of the portfolio, and the UK is around 34%. And that's been coming down recently, the UK position, because I've been putting more and more money into US stocks and into ETFs. And I realistically want to make UK around 10 to 15% of the portfolio, because I don't really believe I'm going to get that much growth out of those companies. And the main bit of growth that I'm going to be getting is from US. As you can see, I've been doing quite well from the US. Now, let's take a look at the dividend dashboard. You can see that this month I made £33.24 in dividends. Last month was around £41, which was my biggest month ever. And this month is actually really good in dividends because I got dividends from around 6 different companies. Let me show you those dividends now that I received. So this table is the dividends per month per company. So you can see here I received £2.04 from Microsoft. I received £7.77 from Realty Income. I received £9.91 from Unilever. I received £12.43 from VWRL, which is the all-world ETF. And then I received 4 pence from Nvidia. And then I got a dividend from Google, which was £1.05. This is the calendar, so we can see when I received these dividends within the month. So you can see I received the dividend from Unilever on the 7th of June. I received a dividend from Microsoft on the 13th, Realty Income on the 14th, the one from Google on the 17th, my VWRL came in on the 26th, and then the Nvidia dividend, which was 4 pence, came in on the 28th. And you can see my total for the year is £160, just for the first 6 months of 2024. And then you can see my average month, which is just the total for the year divided by how many months we've got. And that is £26.74 for this year, which is really good, I think. Around £8 more than what it was last year. That's pretty much the portfolio. Sometimes I go through the investment dashboard in a bit more depth, but I thought today I'd rather show you the stocks individually, show you how well they're doing, show you my portfolio performance, and then show you the dividends real quick. So that is the portfolio update for June. Thank you for watching this far into the video. If you like the video, give it a thumbs up. Any suggestions on improvements to the video content or ideas for content going forward, then please give me a comment below and I'll give you a reply. And you can check out the investment dashboard, which I've just shown you, in the link in the description, where you can sign up to my newsletter and receive updates on this spreadsheet every single month. Thank you.